Okay, we start with our next presentation. Please welcome on stage the company Brookside Energy.
Thank you very much, and good morning everybody. My name is David Prentice. I'm the Managing Director and CEO of Brookside Energy. It's a little bit of a change of pace from the hard rock stories you've been listening to over the last day and a little bit. We're an oil and gas producer in the Anadarko Basin in Oklahoma. We've built a very successful business from scratch. We've transformed from an explorer to a producer. We've built production, we've built scale, and now we have the optionality to be able to grow the business from cash flow, which is a unique proposition in the small company space. In terms of catalysts for the next 6 months or so, we're in the process of doing a US listing of the company. We're actually listed in Australia with US assets, but we're transitioning to a listing in the United States. We're in the process of doing a 5% share buyback. We have a strong balance sheet, existing production, and we're set to grow. So today I'm going to walk you through how we got here, where we're going, and what it means for you. So very quickly on the disclaimer, this presentation's on our website. I encourage you to take your time to read this at your leisure. Okay, so in terms of investment highlights, as I said, we're operating in a world-class basin, the Anadarko Basin, delivering high margin production, and that's the key to this business. It's the free cash flow generating capacity of these wells that has really turbocharged our growth. We have 5,000 acres in the core of the Swish play in the southern Anadarko Basin, and we have 12.4 million barrels of oil equivalent in proven reserves. We're debt-free, we have strong liquidity, and we're trading at a deep discount to our US listed peers, and that is really the opportunity we see through this ADR listing that we're pursuing in the next few months. As I said, we have a buyback underway, and all of that's all set to happen in the last half of this year. So where are we? We've got a premium address in what's called the Anadarko Super Basin. This is an enormous basin, second only to the Permian Basin in the United States. It's already produced 50 billion barrels of oil equivalent, and the experts say there's another 50 billion barrels of oil equivalent to be produced in the future. It's got multiple stacked horizons to produce from. It's replete with infrastructure, so access to refineries, gas processing facilities and pipelines makes it a game changer for companies who make discoveries in this basin. It's long-term, resilient, a world-class production hub, and we're right in the middle of it. So in terms of our strategy, this is a little bit of our flywheel here that talks about how we go about our business. So obviously make a discovery, drill and complete high margin wells, that's that free cash flow engine that I'm talking about. Produce and sell that product into favourable markets so you get a premium pricing for your product. Reinvest some of that capital into growing scale, return some of that capital via share buybacks, and then repeat the whole process again, and that's exactly what we're doing, exactly what we've done. We've grown from a discovery to 2,000 barrels of oil equivalent per day in production. We've gone from 0 to 5,000 acres, and we've just announced last week a brand new initiative in the basin which we think can double our reserves from leasing and drilling over the next few years. So we've built the scale and we're now using that as a platform to grow, and most importantly we're able to grow out of our own cash flow. We've already done one buyback of 5% of our issued capital in 2023. We've got another one underway at the moment, so that's our mechanism for returning capital to shareholders. It's our preferred mechanism. We feel like buying back our shares at these current low valuations is really value accretive to our long-term shareholders, and so we feel like that's a very clever strategy. So in terms of the opportunity here, we're looking at global energy sentiment being at multi-decade lows, and you can see there on the chart, you know, the fund managers are just not investing in this sector, and you can see the deep deep sort of opportunity there, and you can see how Brookside's share price has tracked lower with that net percentage of fund managers overweight the sector. So we feel like there's a really strong catalyst ahead to achieve a re-rating. Obviously, when is that going to happen? When are people going to roll out of some of these other commodities into oil? Who knows? But it will happen, and we feel like we're beautifully positioned to take advantage of that. So what does this all mean in terms of a comparison to our US listed peers? So we're listed in Australia, as I said, and we trade at a fraction of the multiples that our US listed peers trade on. So that's across EBITDA, production and reserves, and that's because we're listed on the ASX, and that's why this initiative to move to an ADR listing on the New York Stock Exchange is so important for us. So we feel like this is a rare opportunity for a double re-rating as we catch up to our US listed peers, and then the general sector catches up from these very, very low, as I said, decade-long lows for the sector generally. So how have we got here and what have we done? So the track record for execution, as I said, we built this project from scratch. We made the discovery. We've gone ahead and drilled 9 very large horizontal wells. All of them have been successful. We brought them into production on time and under budget following the initial discovery. Our reserves have grown by almost 300%. Last year's EBITDA was just a little bit less than $20 million, and for the first half of this year we were just a little bit less than $14 million. So you can see there a massive ramp up in production and a massive ramp up in EBITDA. In terms of our address, we're in the liquids-rich core of the best part of the Anadarko Basin, the most active part of the basin at the moment, where all of the majors are drilling. You can see the activity there in green. We have 5,000 acres in this area. We've drilled 9 wells, as I said already. These 9 wells have already produced almost 3 million barrels of oil equivalent in their short lifespan, and these wells will produce for another 20 or 25 years. Beyond that, we've got 19 high-quality, proven, undrilled wells to drill adjacent to those initial 9 wells. So that's our growth inventory, if you like, sitting on the shelf, ready to be deployed in a more favourable pricing environment. In terms of our reserves, as I said, 12.4 million barrels of oil equivalent. These are independently certified, proven reserves, 58% liquids, which really drives the high margin free cash flow engine that I spoke about. Very strong well economics that are driven by proximity to markets. So we have a couple of oil refineries within 30 miles of where we're producing from. We have numerous gas processing facilities around us, lots of pipeline infrastructure, so we're able to tap into that infrastructure, and that gives us a premium for the product that we sell, and delivers very low operating costs, which again, as I said, drives that very high margin, low risk production. So beyond those reserves, we have 2 emerging formations I talked about in the introduction, the stacked nature of the reservoirs in the Anadarko Basin. So we've got 2 new zones that are emerging in our area, being the Caney Shale and the Simpson Group. These are being developed and tested by some of our peers in the area. We haven't booked any reserves in those benches yet, but at some point we'll have the opportunity to do that as we see the results from the majors that are drilling around us. So, as I said, not yet booked in our reserves, and some significant upside from that. But probably most excitingly is our new initiative that we announced last week, which is our Riverbend AOI. So this is like, I guess, winding the clock back to 2018 when we made the discovery, the first discovery that's got us to this position. This is another similar scale opportunity that we're starting from scratch again, and again funded out of cash flow, no need to come back to shareholders, and we've got an opportunity to build up a land position, drill our initial wells, book some reserves, and really got that opportunity to significantly increase our proven reserves. So 24 square miles, slightly higher liquids content than the production that we're currently drilling, so about 82% liquids with very fast payouts, so these wells will pay themselves back in around about 12 months. Leasing is underway in this new area, and as I said, potential to increase our reserves significantly once we get leased and have some drilling happening in this new area. So what's happening for the balance of this year and into 2026? So what are our tactical priorities? So given where the oil price is at the moment, it's about maintaining steady production and then pacing the release of our inventory as prices improve. Build scale by executing our leasing campaign inside the Riverbend AOI, and continue our share buyback and our balance sheet discipline. So this is about positioning ourselves with increased scale, steady production, good cash flow, buyback, and then look for that re-rating. So catalysts for the next 3 or 4 months, we've got this ADR listing that we've been working on for the last 6 months, so that's getting to the pointy end of getting ready to make that happen. So we'll have that, and obviously US roadshows to try and attract US investors to the story. We'll continue with our share buyback. We'll be drilling again in the first quarter of next year with the optionality to be able to ramp that up if we see prices improving. And we'll continue to execute down in Riverbend and provide updates to our shareholders as we build out our acreage position down there in Riverbend. So on the capital structure and liquidity, we've got just a $35 million market cap, no debt, $25 million undrawn facility that we can use if we want to ramp up production, and an EV of just sort of $25-26 million. And you can see there on first half EBITDA of 13.6 or $14 million. So really a crazy opportunity. In terms of the team, deep US technical and operational expertise. We've got a proven track record. We've done this before. We've proven that we're disciplined capital allocators, which is obviously key in the oil and gas business. And we've got very strong networks across the United States. So just to wrap up, strong production base, high impact reserves and acreage. We're debt free, with strong liquidity, and we feel like we have very clear catalysts for re-ratings over the next couple of months. We've built a platform that allows us to grow and stay in control of our future without having to come back to shareholders for additional capital. We're catalyst rich. We feel like we're undervalued, under-owned and ready to re-rate. Thank you very much.